Hello and welcome to what is now the second of my podcasts. So I decided to start a podcast because not everyone really has the time to sit down and watch videos, but a lot of people are on the move and they do have time to listen to a podcast. Now, my podcast is centered around Ask Sean About Gold and Silver. I didn't take any questions this week really. If anyone has any questions for next week, I'm more than happy for you to pitch them. This week I want to talk about the topic: if you don't hold it, do you own it? It's going to center around 3 different ideas that I've been researching, 3 different ways to essentially invest in gold. It's going to run through the pros and cons, and it's also going to talk about where I think the market is going to go. Now, before I get into it, I'm not a financial advisor. So anything you do listen to in this podcast are my views and my views alone. I'm not telling you to go out and purchase assets. I'm just giving my views, and I'm hoping that it opens up your mind or your eyes if you're not already into this type of thing. So if you don't hold it, you don't own it. Now I want to talk about physical. For those of you who have seen the picture, I've got physical coin in front of me. Now I love physical coin, but I don't think it's the be all and end all. I think a lot of people get so fixated on having coin in front of them or having coin in their possession, when I think it's great if you want to avoid counterparty risk. It's great if you want to hide something or pass something down to the next generation. It's a great store of value, but it's not necessarily the cheapest way to own it. It's not necessarily the cheapest way to access it. You know, if you just want to access the gold market, there are other ways that you can buy into it that are cheaper, that involve not taking delivery of your gold, whether it be in bar form or coin form. And it's something that every investor needs to really have a think about when they do invest their hard-earned assets into hard assets, or even paper assets, or hard assets that are controlled by someone else, in the sense that they control the movement and where it is. I think it's very important to distinguish the different types and different ways you can buy into gold. So the first way, like I said, is physical. The second way is allocated. And I had a subscriber post to me the other day. He said, do you like allocated, such as Bullion Vault, or I think he said Royal Mint My Signature? I think that's what it was called. I haven't personally looked into it, but I am familiar with Bullion Vault. Now I was looking at how much it costs to have your own gold bars held in storage by Bullion Vault. It's very attractive. It's a very attractive way in terms of low cost entry points over spot, and also it's insured and you can get it. You can pick it up, and you can equally just sell it on the order board that they have. It's a cheaper way of owning coin with less hassle, but it doesn't give you the lack of counterparty risk. It doesn't give you the ability to pass it down to a relative to plan for when planning for inheritance tax. There are pros and cons to either, but you still technically own the asset. Now there are going to be people who argue, but what happens if they go out of business? These tend to be in specifically vaulted, I was going to say arenas, probably areas, warehouses, and they do have special protection. You need to make sure that what you are buying is what it says on the tin, though, because some allocated products are not as allocated as you think. So if you have an allocation where you have the exact bars, then you can specifically pick that bar up. You can have a joint allocation where you have ownership of, say, a box, and then it's kind of a derivative of the allocation. And sometimes you just have a claim to gold. I wouldn't go for that. You might as well own the physical. Now the last thing I wanted to talk about out of the 3 was shares in gold companies. And you may be thinking, whoa, You're a coin dealer. Wash your mouth out in soap. But I think it's getting to the stage where it's undervalued. Now, I think the stock market's overvalued at the moment. I'm waiting for a correction. However, if the stock market falls off a cliff and everyone rushes to gold, a lot of these companies are going to go from, and some of them I believe are in bargain territory now, they're going to go from bargain territory to they will 3x, 4x, 5x in terms of what they will return on their investments. Now, I've been looking into stocks and shares. I was going to put out some reports over the last month. I decided to hold off against it on the basis that I didn't want to put something out that was not quite up to the standards I wanted to put it out. I had the bare bones of what I wanted to put out. I knew the companies that I wanted to talk about, but I didn't have all the details. There were lots of things when I buy into a company that I want to check out. One of them is its assets. One of it is an independent report, such as in gold mining, it's called a JORC, or in mining in general, it's called a JORC. Don't ask me what that stands for. One of it is the company expectancy of the mines. One of it is the director team. There's lots of complex little things in place. One of it is how the company is actually set up structurally. You can have a great mining team with sound financials and great potential, but the company's set up to potentially do shareholders out of money. I've seen that before. I've seen some absolutely fantastic assets on the stock market get completely rolled over by the main shareholders and directors. It's morally wrong, and it's something you have to guard yourself against. You will never have this issue when you're buying physical coin. The coin is yours, but you're never going to be in a position where you can maybe 3x or 4x. It's just not going to happen in the short run. Now, one thing I was looking at recently, as you know, is to do with the money supply. I personally believe there's a direct correlation between money supply and the value of gold, and I personally believe that the correlation between gold and silver, or the gold-silver ratio, for want of a better expression, will continue to widen all the time that they pump excess money into the system. These are my beliefs. I'm not saying they're factual, but these are the observations that I've come to and the conclusions that I've made. Now, if you believe that is the case and coronavirus carries on, there's no reason why you can't look at a company. All you do is you go to, for example, London South East, lse.co.uk, or you go to Hargreaves Lansdown, and you look at what companies are there, and you go through the mining companies. There's no reason why you can't look at a company, go to their investor reports, and check what their all-in cost is for producing gold. Now, I had a look. I actually had a look yesterday. I'm following 18 companies. They're not all predominantly gold. They are, however, listed on the stock market. They are in a wide array of areas. Some of them are explorers, some of them are junior miners, some of them are mid-cap miners. I didn't look at the big miners. But when you look at their all-in cost for extracting gold, there's some of them that are extracting gold for $700 an ounce. Now ask yourself this. If you believe what the reports are concerning the price of gold from some of the brokers, for example, Bank of America, who believes that gold is going to go to $3,000 an ounce, you're looking at a 4-to-1, 400% markup. I'm inclined to believe that any company that is a junior miner or explorer with reserves already in place, who's got, say, an all-in cost of 700 to 750 ounces, they will get taken out of the equation by the mid caps and the bigger boys. So you've got to ask your question: if you don't hold it, you don't own it. Does it matter? Does it really matter if you own it, as long as you have access to the potential upside? I think it's an important question. Now, personally, I'm going very long on physical. I'm going a small position in allocated, not much. And I'm going I'm going to be buying into companies. I am worried the stock market will go down. Hence why I'm putting a small position in. But if you believe with my way of thinking, and you don't have to, you should always look at the information in front of you and make your own viewpoints. But if you do believe in the way I see it, it makes sense to buy into some of these companies. And it makes sense to buy into some of these companies that you may make 30 or 40% on gold. You may not make anything, but you may make 30 to 40% on gold. You may make 300 to 400% on a minor with a bit of luck. Have a think about it. Would you rather have a potential to make a vast amount of money, or would you rather have it in hand? There's no right or wrong. It's just me trying to evaluate the world around me, and I'd love to hear your views. Do you disagree with me? I'm not saying I'm an expert. I just call it how I see it. You know, I do have a master's degree in management, you know, and I specialised in business strategy. But I've spent many years trading, and I've really got to know the market. But I'm always having my ear on the ground. I'm always looking to talk to people who can challenge my point of view in a way that can move the discussion forward. So that's it for today. I hope you've enjoyed my second podcast, and I hope to hear some questions from you guys next week. So take care, guys. Bye.